Hi there, everyone, and welcome into this week's market update. Don't forget that any advice contained within this presentation is general only, so it isn't tailored to your particular circumstances. You need to decide for yourself whether it's appropriate to you. Okay, so having a look at the XJO today, we're about an hour off the close, just sitting at the trading desk at the moment. So right now we're just hovering below that 7,000 level, and you can see that is a very key level of our market. It's where the 200-day moving averages come in, and that's probably the key resistance level to indicate that we could see a reversal pattern here. So there's a few levels I want to see before I want to really call the bottom of this market. You see there's a double bottom pattern playing out, but that only confirms if we break through 71.30. There's a shorter term pattern here called the inverse head and shoulders that if 7,000 breaks out, we confirm that pattern. So there's a few indications that we could be bottoming here. We've also broken that downtrend line through here of recent. So I guess what we're establishing here, guys, are we going to go into a bit of an uptrending situation here? Are we going to continue the downtrend, or is this just the start of another channel, right? I think we're in that pivot point where we're going to find that out in the coming days. But the XJ is definitely looking a bit overbought at this point of time. Up here at 7,000, a lot of key levels of resistance and a lot more to come and test these markets over the next few weeks. So I'm not quite convinced we're going to break higher here, not just yet, okay, especially with the Fed tonight. So at this point of time, guys, technicals are suggesting we could be starting to see some reversal patterns, but they have not confirmed yet. We do need to see that breakthrough either 7,000 or the 71.30 before we can confirm those reversal patterns. Otherwise, we are still in a bit of a sort of a sideways trend really for the XJO. Now, the S&P 500 is showing a little bit different signs here technically. Really short term, yes, we've got a bit of a double bottom here, which is almost finished, okay? So that broke up through there. The target for that double bottom is maybe another 100 points higher from where we are now. But essentially, guys, when we zoom out on the S&P 500, we can see the downtrend is clearly still in play. We still got lower peaks, lower troughs overall, and the downtrend is a lot clearer here than what it is on our market. And for good reason, okay, and I'll talk to those reasons throughout the rest of this video. But for now, the technicals for me are still showing a bear market for the S&P 500. Overnight, they gave back a bit of those gains. Looks like they're struggling to get through the 39 level over there, and also for good reason, considering that we do have a Fed meeting tonight, and really the attitude from the Fed is going to determine where we go next. For most world markets anyway. But yeah, so technicals, guys, if it breaks through 39, I think we're bullish to at least 4,000 or 41. Okay, I think that's the upper point where I would start looking to go short this market. That's where the 200-day average comes in. That's where your downtrend line comes in. Okay, so if we're not going short from here at 39 on the back of the Fed, if the market keeps climbing, I'd be looking to go short around that sort of 41 level up through here. Okay, so some of the things that have been happening over the last week. Iron ore has crashed off quite a bit. A little bit of a bullish couple of days here, but still overall quite a bit lower to where it was. So that's put the iron ore miners on sort of edge. We've seen a big move down over the last few weeks. With a big question of whether this is the bottom or not. So just be wary, there's a bit going on in that space. A bit of question mark around China, what's happening with their COVID zero policy, and whether they're going to be spending big on real estate moving forward, and it doesn't seem likely. So look, iron ore's in a bit of trouble right now, and we're looking to see where the bottom of that comes through. But just keep an eye on that space, because the miners have come down a lot. We're seeing a little bit of premature buying here, and the selling could easily kick back into gear in the coming few weeks. The question is what happens with the banks from here on the Australian market as well. We've seen a huge rally up in the banks here and in the US. The RBA announcement on Tuesday also helped buoy that rally in the banks. But don't forget that the ANZ and Westpac are reporting later next week. And usually the seasonal pattern is up into the reporting, down after the dividends. So I suspect through November we're going to see a sizable pullback in that financial sector. So the RBA backed off a little bit yesterday. We saw 0.25% rate hike rather than 0.5%. So that's two months in a row where they've just gone a quarter against the Fed going 0.75. So the RBA's backed right off compared to what we're seeing out of the US, and for good reason as well, right? Because our market or our economy is much more sensitive to rate hikes than what the US is. They do have longer term fixed rates over there. There's a lot more of a larger percentage of the loans are fixed in the US, whereas whereas a much larger percentage of loans are variable here. And if they're not variable, they're only fixed for 1, 2, or 3 years, generally speaking. So, yeah, the effects of the RBA lifting rates here could be felt a lot more. And I think a lot of people are glad that they're not going as hard as what the Fed has been recently. So, a bit of a contrast of views, I guess. The Fed's doing whatever it takes to bring inflation down. The RBA's making similar comments, but lifting at a very, very much slower rate than what the Fed is. So, very different attitudes between the central banks at the moment. You're seeing the same sort of thing happening in Canada, where Canadian central bank is lifting at a much slower rate, same as in the UK. But you're seeing, other central banks like in New Zealand and in the US lift very quickly and very aggressively. So, that's really quite interesting to watch. Now, we've still got a lot of inflation pressures. Crude keeps pushing higher. OPEC keeps threatening to cut production. That's not good for the inflation story. Inflation remains high. We're seeing readings across, most Western economies indicating this. So at this point of time, we haven't seen any change in the inflation story. US GDP came in strong. You've got strong economic data coming from the US, strong job numbers. Nothing is suggesting that these interest rates are slowing the US economy down to help bring inflation lower. Right? If anything, things are staying quite strong over in the US, and this is what makes us think that the Fed won't pivot. Okay, and everybody's questioning will the Fed pivot for the December meeting. I don't think they will, and I don't think the language is going to change any tonight either. I think really that J Powell's going to have to stay on a strong path or make everybody think he's going to stay on a strong path to lift rates higher. He has to bring that inflation down, and the only way he's going to do that is by keeping everybody fearful and stop people from spending the money they've saved through COVID. They need to slow the economy down. They've indicated that. I think he's been pretty clear on that, and I think this is a massive speculation at the moment that the Fed's going to pivot in this meeting. I don't think they're going to pivot until sometime next year, to be honest, guys. I think you're going to see a 75-point rise tonight, as most people believe, and I think the December meeting has a very high chance of being another 75-point rise. What's going to be telling for that is going to be the next CPI reading next month and further economic data between what we see now and then. The question is what the market's going to do tonight. Okay, the market's going to react depending on J Powell's language. If he starts talking a little bit more neutral, then the market will rise. At this point in time, I believe a Fed pivot's being priced in. If he doesn't pivot, if he comes out quite strongly hawkish again, I think the market could easily give back a lot of the gains it's had over the last month. So let's see what happens. The next thing I haven't really talked about is obviously the midterms, okay, and that's going to come up for us next week. I'll talk about that a bit more on Tuesday next week. At this point in time, it's more about the Fed. Will they pivot tonight? Will they start talking a little bit more neutral and sort of talk down the December meeting, or are they going to talk up the December meeting and keep that strong rhetoric, that strong language that rates are going to keep going up strongly over the next few months to bring inflation down? And I'm at this point on the side of thinking that they're going to remain quite hawkish to keep that fear out there. Stop people from spending. Okay. All right. So really, there's not much more to talk about, guys. All this strong economic data, all this strong inflation data we're seeing, to me, just says interest rates are going to go higher and higher and higher. I don't think the Fed's going to pivot just yet. I think we've got quite a few months before that happens. So my feel is markets are overbought. We're dual pullback, and that's really going to come down to what the Fed's language is tonight. All right, so that's where we're at. Thanks for listening in this week. Take care and bye for now.